Hello, everybody, and welcome to the Like a Totas channel. Happy Monday. I hope you all had an amazing weekend. I'm recording this video on a Monday, January the 19th, the January the 19th. And today I want to break down the impact of potential tariffs on 8 European countries on the back of all these conversations on the purchase of Greenland. So I'm not going to take any sides from a political standpoint. That's not the purpose of this channel, and certainly not the purpose of today's video. But what we really care about is whether we care about the ramifications of these policies on the stock market, and particularly if they affect some of the companies in our portfolio, and if those effects are going to be permanent or temporary. Okay, so before I delve into today's video, I once again, this is a post that was made on my LinkedIn channel by one of the people that have been working with me. Palavish has been doing a great job, and I'm going to read this out to you guys because I think it's so important. Accounting is the language of business. Temperament is the language of profit. Guys, please memorize this sentence, which I think is fabulous. Accounting is the language of business, but temperament is the language of profit. I used to think my psychology degree was irrelevant to finance because I learned nothing about the stock market in school, right? I was wrong. Understanding human behavior is the ultimate unfair advantage in the markets. So the math matters, but it's only 20% of the equation. The math, this is where 80% of success happens. And if you know me, and if you have been following the framework that we use, then you know that temperament is by far the most important thing when it comes to successful investing. And sure enough, this is exactly what Peter Lynch, one of the best money managers of all time, has mentioned, right? All the math you need to know is like third grade math. Okay, everything else is just about temperament and about being capable of stomaching volatility, which is exactly what will make you a successful investor. Okay, and so situations like those we are seeing today, we need to take a step back, okay, before we take any action, because this is what most people will do they don't have a framework. They will panic at times when the market is selling off, and they will ask questions later, which is completely wrong. You should do exactly the other way around, right? So be slow, be rational, and most importantly, be patient. And sure enough, if you will do that, you will start compounding money at great rates of return. So if you want to hear more about our framework, by all means, just you can sign up completely free for our upcoming webinar, as you can see right here. So we already have 130 registrations. I know that some of them have come from YouTube. So, congratulations already, guys, because this will be a session jam-packed with action. Okay? So let me just do that. Awesome. So let's moving on right here. And let's and you can see, so I have a few things that I would like you guys to read. Let me just minimize this. So US stock futures slid in the Asian session after Trump announced tariffs on 8 European countries, triggering a broad risk aversion across global markets. Trump proposed tariffs linked to Greenland negotiations raised the risk of a full-scale US-EU trade conflict. I mean, come on. It's incredible. We live in a world, there is just so much conflict, guys. I mean, it's just unbelievable, if you ask me, that in 2026 we have so much conflict as compared to many years. I mean, we would have to go back many years just to see this instability, not only in Europe but all over the world, in my opinion. Okay, so you can see that also mixed China data weighed on sentiment, with weaker housing and retail sales offset only partly by stronger industrial output. But in my opinion, this is not the big deal. This is the big deal, right? The tariffs noise. So U.S. stock futures slide. Okay, U.S. President Trump announced a 10% tariff on 8 European countries on Saturday, January 17th, impacting risk appetite. And so these 10% tariffs were aimed at pressuring European leaders to agree to the US purchasing Greenland. The threat of a full blown US EU trade war triggered a flight to safety, with the Nikkei 225, the Hang Seng Index, and the ASX 200 joining US equity futures all in the red. What's important is that despite rising geopolitical tensions, market optimist AI linked earnings, hopes for multiple Fed rate cuts, and robust US economic indicators support a bullish medium term outlook for US stock futures. So I agree with that. Okay, what I've been preaching on this channel is that, look, we cannot predict what's going to happen to the map. So we can't predict whether there will be more wars or not, or whether there will be tariffs or not. But we can. But what we can control is the quality of the businesses that we buy and the price that we pay for them. Okay. So if we try to understand the fundamentals, we can see that earnings are actually supposed to come in strong in this quarter. And right now we already have companies reporting. So the earnings season kicked off last week, if I'm not mistaken, with the big banks already reporting. This Tuesday, so tomorrow, we're going to have Netflix reporting. So ultimately, it's going to be earnings that drive stocks higher or lower, right? And that's all we care about, especially in terms of we want to see that the companies in our portfolio perform well, of course. Cool. So, all right. So we have all these tariffs noise, and then you can see also right here, you can see that tariff sensitive stocks such as car makers and fashion are falling this morning. All right, and so is the dollar index, which fell by about 0.2% as markets opened in Europe, while precious metals had a 2 new record highs. Of course, so it's flight to safety. So if I go here to our eToro platform, you can see that silver, for example, is already up another 3.81% this morning. And you can see that companies like, for example, companies like LVMH right here are down 4.13% this morning. So yeah, they are getting slammed. They are getting slammed exactly on the back of this trade war. Okay, so it remains to be seen whether this is going to have legs or not. Okay, so we're going to have to wait for the European countries to respond and see what exactly is going to happen. But what I want to say here, guys, is that just make sure you have a great watch list, right? Just build your watch lists of high quality companies and then determine the intrinsic value for each of those companies. Okay, and when the time comes, if they come down to your entry level, and provided the story has not changed, by all means pull the trigger on those companies. We've seen this multiple times, that the market will always tend to they will tend to be volatile in the short to medium term, but in the long term, what really matters is the fundamentals of the companies. Okay, so this is what I really wanted to point, so to discuss in this short video here. And yeah, man, I mean, just stay safe, don't be emotional. Remember, we are like a tortoise type of investors. That's all what we do. So we only focus on what we can control, and we just stay away from macro related events that really we can work them to our advantage. They are there to serve us. Volatility in the stock market to the downside is a big positive for us long-term investors. So provided you happen to invest in the best companies in the world. Okay, so guys, if you like today's video, just smash the like button. And once again, Thank you so much for the great support. I can see that the number of subscribers continues to go up, especially every time I put out a video on PayPal or Lululemon. You guys seem to love them, and I'm happy for that, because I mean that is certainly my case. That's why I own the two of them. So yeah, smash the like button if you find this insightful, and share this video with more people that you think can benefit from what we are doing right here. Stay tuned, guys.